Hey, what's up everybody? This is Drew Page. Welcome to the Drew Page channel. In this video, I want to give you 3 things you should never do when the market is crashing. As you probably know, we experienced a pretty bad week in the market last week. All 3 of the major stock indices were down. The Dow, the S&P 500, and the NASDAQ. The NASDAQ's just been completely obliterated over the last week or two. And the S&P and the Dow have all been negative this entire week. And it is so bad that even some of the people on YouTube who have been climbing the ladder and saying buy the dip are now posting that you should sell. And so everybody seems to be getting in a selling mode, thinking the market could go even further, and people just don't know what to do. I wanted to jump on here and give you 3 things you should never do when the market is crashing. If you find this helpful, please subscribe to my channel and like this video to help with the algorithm. That's the first thing that you can do to help yourself. But seriously, let's jump in. Number 1, don't panic. The last thing that you need to do is panic. You turn on the news, you watch CNBC like I do, or some other news channels, and you think that the sky is completely falling. But just remember, just a couple of years ago in 2020, the market sank way down, and people thought that it was the end of the world and that the pandemic was going to take over everything, and the markets were crashing, and the commentators just didn't know what to do, and so everybody started selling, and the market sunk way down. And unfortunately, I bought into the panic. I heard everybody talking about don't catch the falling knife, and so the market's going down. And Mohamed El-Erian was on CNBC talking about how, just like in 2008, this might be a major dip here in April, but hold on because there's a bigger dip coming later. And we're still waiting for that second dip, by the way, Mohamed. So if you could let us know when that second dip is coming, because it never came. The bottom hit and it went right back up. And if you were waiting for the right time to time the market, you may have missed the opportunity to buy. And I know I did. I'll be the first to tell you, in 2020, I missed the very bottom of the market because I was listening to the people on the news, panicking, telling me that there was going to be another bottom, because I lived through 2008 and I remembered what it was like having that first initial bottom and then it hitting that real bottom in 2009. And so I understood exactly what these people were talking about. And so rather than buying like I should have, instead, I waited and I ended up missing the bottom. I still made some good money in 2020, but not anywhere near as much as I could have if I wouldn't have panicked like the rest of them. And yes, we don't know where the bottom is in this, but if you don't panic and you have a strategy, you stick to your strategy and you don't listen to what everybody else is telling you to do. You don't sit there and worry about timing the market. You just keep your wits about you. Don't panic. Even if you just started investing in 2021 at the end of the year and you're buying things that were at the top, just hold on. You don't need to just dump everything and just go into panic mode. Stick to your strategy. Which leads me to number 2. Don't stop investing. It doesn't matter what anybody says about catching falling knives or any of that stuff. Don't quit investing. One of the wealthiest men in all the world, Warren Buffett, says this regularly: be greedy when others are fearful and fearful when others are greedy. When everyone else is in a panic, that's when you should be looking to get into the market. And when everybody's excited and euphoric, that's when you should be cautious. And so when you hear these people talking about catching fallen knives, you can develop a strategy so that you don't put everything in right now just in case there is a bottom, but you progressively purchase all the way down. That's been my strategy ever since I learned my lesson about 2020. Anytime there's a red day, I purchase a little bit. Typically, I'll take the greater of the 2 numbers between the Dow and the NASDAQ, and whatever that number is, I will put that into the market. So if the Dow is at 450 and the NASDAQ's at 358, then that day I put $450 into the market. And if the next day is a green day, I leave it alone. And then if the next day is a red day and it's $500, then I put $500 in. And if the next day is $200, I put $200, and so forth. So that way, even if it's going down, I'm not putting in everything that I have. Now, you may not have that much money to put in, but devise some sort of strategy so that every time there's a red day, you can put some money in eventually it's going to hit bottom. And you say, well, how in the world can you say that, Drew? There's no way you can know that. Well, it's very simple. All you have to do is look at the historic chart. Look at this chart of the S&P 500. You don't look at charts based on what's happening now or even what's happening in the last year. Look at what's progressively happened in the S&P over the last 20 years or the last 50 years. It's not going anywhere. The market's not going to completely crash and it's going to go to zero. That's just not going to happen. The people at the top, that the wealthy that are controlling things, aren't going to let that happen. And you don't need to let that panic, fear cause you to have any problems. What we're talking about here, if you just look at the difference between where we are now and where we were even just a year ago, this whole week has been a tiny little sliver of a drop in comparison to where we've been. Over last year, we were up over 20-some% in the S&P 500. So don't worry about it. Just red days, invest some amount of money so you feel that you're in control. You're not putting everything in there so that you're not catching the falling knife, but you're progressively putting a little bit in every single red day. I mean, there will be companies that go to zero. There's no doubt about it. And there's no telling which companies those are going to be. But if you're investing in the market as a whole, like in an index fund or an actively managed mutual fund, the chances of those going to zero are slim to none. So put a little bit away, invest each time. And the third thing that you should never do is become negative. Keep a positive attitude. No matter what happens in life, no matter how much money you may lose in the market, don't let it negatively affect you, because if you do, it's going to change the way that you do things, not just in the market, but it will have a negative impact on you, on your family, your relationships, your co-workers. Don't allow circumstances like this to negatively impact you. It's kind of like on the movie The Secret. When you are putting out negative vibes, it's going to attract negative things into your life. But when you have positive vibes and you exhibit positivity in every circumstance, then positive things are going to come to you. So don't become negative. Don't give in to the fear. Don't let the panic cause you to change your strategy to keep you from investing, which then will make you a negative person in other areas of your life. Make sure that you don't panic. Keep investing and stay positive. Everything is going to be okay. So if you found this video helpful, I hope you'll subscribe to my channel and like this video. Put in the comments what you think. What are some tips that you would have for people when the market is crashing that will keep them going and not panicking? Until next time, stay tuned.